What's up, folks? Sorry I'm late. Uh, literally have a flat tire. I will be back once I re park my car, and we'll get started. Give me just a minute. I'll be back in a second. Boom. All right. What's going on, folks? Yeah. So today, I didn't even have a chance to do my intro. Thanks for joining. Happy Friday to everybody. I literally had a flat tire today that I had to handle. Um, been actually talking about my you guys may know that I love having a Tesla car, Tesla Model S. And Elon on the earnings call discontinued it. And I'm pretty pissed off about it, honestly. And I know I come on here and I say don't trade emotionally and things like that. But one of the theses about me getting a Model S was actually, yeah, let's make sure everything's right. That was one of the reasons I bought a lot of Tesla shares back about 3 years ago. Um, felt like I'm a fund manager. I sold a lot of it this week, actually. We'll talk about more about that in a little bit. But of course, topic at hand is silver. Now, let me get all my tech stuff set up real quick. Because like I said, I was coming in. Oh, yeah, let me share the link to some people's. Let's see. Yep, we'll talk about MicroStrategy. I know a lot of I did a talk yesterday. I have a little local Bitcoin meetup that I've been going to for a long time, and I don't want to mention names because they may not want to, they may not want to be public, but some executives and some of the biggest Bitcoin companies have actually come through our Bitcoin Atlanta meetup. I had a talk with one. Uh, I don't want to give away information. Let's just say he works at a major um, treasury company, or did, and he doesn't anymore. Not going to give me extra details of that, but I've almost felt bad because he's such a good friend talking about MicroStrategy. Oops, I just gave it away. But now that he doesn't work there anymore, I didn't feel as bad, and we had a good time talking. I love talking to that guy. But Yeah, someone actually asked about MicroStrategy at the end of my, closing statements. Basically, we were celebrating Bitcoin's birthday, and I can show you the slides. Actually, that'd be a good thing for me to kind of go through and do if you guys want to see it. Let me make sure that I've got everything set up here. So I got to get my chat up because yeah, normally I would just maybe just cancel the live stream, but no, 2026 is all about consistency and retard maxing. Retard maxing is where I'm just going to do things. I'm not going to think and feel too much about them. I'm just going to do things. Hold on a second. Okay, there we go. Got my chat up. Thank you very much. No second best. All right. What's up, Outshine segment? Hi, buy the silver dip. We'll look at it. Honestly, I've been completely neutral, ambivalent to silver. I got a lot of friends, big bulls on silver, and I think it's important to understand the context in which the silver trade has been happening. Got a bunch of dividend tickers to check out. Yeah, get your symbols in for this year. By the way, there'll be a little small account update. The update is I'm sitting at now like a little minus what is it? What is it? Let's see, hang on. I think I'm at a minus 0.1 loss. Let's see, 100 divided by. You'd think that I'd be able to do math that quick. Yeah. I'm at a negative point. I'm at a negative tenth of a point because I closed the Microsoft trade. Microsoft had earnings and it triggered my stop. It worked out pretty well for a while. Did not. And actually, I took a little small position on Hood, and that actually didn't plan out well. So I'm sitting now. And I would have, like all people would, I'd love to start with a good position, but I have no patience for losers. And I'm trying to show how I do things. And so I'd rather be out and looking for a new opportunity than still in and hoping it comes back for me. So, all right, well, let's talk about silver to start with, and then we'll get into Bitcoin and MicroStrategy, and then we'll look at your symbols, and that's the thing. So, silver, of course. Wow. Now, one thing I have been, it's not really a fight against my ego because someone asked me this week or last people have been asking me a lot. "Oh, so what are you going to do with silver? Are you going to short it? Are you going to buy it?" And I was like, well, shorting it. I know better than to go and try to short something. Let's go back in time that looks like this, because that is just an exercise in ego. That's me trying to be right, and everyone else better, trying to be more right than everybody else. I know better than that. And actually, last night when I was doing my my presentation, I brought silver up because part of it was about silver. I incorporated silver into it, and I'll show you in just a second. And I noticed something, and of course, that's the title of this live stream. The thing, when we talk about silver, when we talk about Bitcoin, when we talk about stocks, to me, they all have their fundamental stories. They all have their character. There's something unique about them, but they're all really a chart. They're all, to me, there's a symbol and it's a chart. I'm all about the price action. And the thing that I want people, if anybody watches my live streams, to understand is just the very simple concept of a false breakout. Whenever you get up to a major high and then price does a candlestick wick that breaks above that high and then closes back inside it, that is your number one sign of reversal. Every live stream I talk about that, because whether it's Bitcoin back on the weekly from just a few back in October, where everyone was celebrating 126 new all-time high, I saw that weekly close. It did not make what needs to happen. I call it a big green dildo bar, where you punch up. I guess it's a bad image. You punch up into a higher price. That is what you need for a breakout to continue. And when you see that kind of a failure, that is one of the most consistent signs of reversal. And that is the basis for a lot of the trades that I take, which is where I look for price to go in one direction and then snap back in the other. That's the premise of my 30-minute spikes that I do a scan for and try to find, opportunities on stocks all the time. It's where a lot of my trade entries come from, doing this at levels. And of course, when I saw that last night, I noted it at the end of my presentation because we were looking at charts, and sure enough, there it goes. Now, did I make money on it? No, because frankly, I don't feel like putting up $80,000 of margin to trade a silver's contract. I mean, I could have, I suppose, but like I said, I've just been kind of neutral to it. Um, but I think it's very important when we're looking at silver, we kind of cut through a lot of the narratives because a lot of the people that have been in silver for well over a decade, or in one case, my buddy who got into it during the Ron Paul days, as a monetary debasement trade, in other words, a dollar debasement trade, is uh, they still think that that's what's going on. But I gotta show you guys something. You know, here is on the daily. This is copper. Here you have platinum. Here you have palladium, and here you have nickel. They're all suffering drawdowns here. Now we're not. Now we may have nickels as coinage, but we're not going to start using platinum as money, nor are we going to use palladium, maybe copper. But no, these are metals. So what you're seeing going on with gold and silver is not like a monetary debasement trade. At least I don't think so. I just don't think the evidence is there. So one second. What's up, Swanson? I bought the dip by selling puts. IV was just too juicy. Yeah. So that is one thing that I played around with last week. I think I talked about it in the live stream. Give me just a second here. So I have let's see. I have see, that's one account. Don't want to show my account number. Let's see. Silver. There we go. So I have a silver thing with where I can see IV, and IV kept on making new record all-time highs. This is a daily chart of implied volatility. And so I kept on wanting to sell premium on silver SLV, but it just kept on going higher. I wasn't able to find a trade that I liked. And yeah, there was money to be made, but let's do the 50% retracement on it. So now it gets kind of interesting to see. We're going to measure this all the way from the swing low that happened in April of last year. We're going to take the long one. And yeah, if you bought silver when it hit down to 74, 74.6, I would not be mad at you. I would not be mad at you because that is a 50% retracement. And there's probably enough price action in here that you could back this up with a volume profile. I'm going to let me do that now. See, hold on. Leave. Yeah. Yeah. You know what? It's a good level, good pickup there, man. I'm not mad at you. I'm not mad at you. As I said today, I was a little busy, didn't grab it, but yeah, right here, 1:30 p.m. Man, that's a good pickup. Look at that. Right to the 50%. Okay, now I'm a little perturbed that I got a flat tire and I was handling other business today. Man, this week for me has been about missed opportunities. I'm not happy with it. Not happy one bit. But that's just the way it is. That's just the way it is. But yeah, that pullback makes things very interesting. And now we see the level that it has to hold. That's a really good level in silver. Good call. Good note on that. Excellent job. No, I think that's really good. I think that's actually really good, Swanson. Oh yeah, that's good. That's good. What's up, Zygor? So let's see. Yeah. All right. Moving on. Let me bring up something here. Yeah, get your symbols in. I'll take a look at them when I can, guys. I want to bring up those slides from yesterday for the Bitcoin birthday celebration. I'll run through them really quick. Let's see. Nope. There it goes. Okay. because if you guys didn't know, Bitcoin celebrated its birthday. It was what day was it? It was January 3rd, 2009. So Bitcoin now is 17 years old. It can't quite vote yet, at least in America. And if it's in Europe, it could probably buy booze, but it's still way too young to be getting drunk. All right. So I'll just run through this real quick because oh crap. Hold on. Is it gonna do son of a bitch? Hold on. Okay, there we go. All right. So famous, every good presentation should start with a famous quote. You know, first they ignored. Oh, but crap. First they ignore you, then they laugh at you, and then they fight you, then they win. Elizabeth Holmes said that actually, and so a little bit of Bitcoin history. You know, it's gone through several phases. You know, it was January. Come on now. Well, we'll leave it at that. Let me just go through this. Basically, Bitcoin was ignored. It was laughed at. It was fought. And finally, after all these events, Bitcoin won. Nobody said it. Nobody did anything. And I said to my audience, please clap. Please clap. And I couldn't help but think, well, are you guys that are, you know, have been big into Bitcoin and crypto? Are you guys focused on something else? Because remember, this is before today. Are you focused on silver? Are you focusing on that? And a lot of the people that have been, you know, big into Bitcoin for years and years and years have done it really. I would say January of 2021, when the narrative for, you know, the Bitcoin debasement trade, or excuse me, the USD debasement trade became the overarching narrative, or at least one of them for Bitcoin bullishness. That it really, January 2021, after all the COVID money printing, is when it really got started in earnest. Okay. And I think a lot of Bitcoiners have been looking at silver and gold just really dejected because it's not happening to them. But I don't think that's actually what's happening. I mean, even though the dollar index this week, you might have seen in the headlines, it hit a 4-year low. Dollar index is the U.S. dollar indexed against baskets of all other currencies. And of course, you know, this is what, when I took my screenshot to make my slides, this is where it was at, gold and silver. And this is a buddy of mine. Comparison is a thief of joy. But here's the thing, guys. So the consumer price index, now I know we say it's all manipulated and everything's like that because the Fed is constantly massaging those numbers to try to get the number that they want. That's what people say. That's what people say. But let's just take it at face value that the consumer price index is somewhere a little over 2. Okay. Yes, I know prices are a lot higher than we remember. That's because humans have recency bias. I was talking to my uncle this week. Went to go see him about some things, and I was talking about buying my house. And he said, like, "Oh yeah, my first house I bought for $14,000," or as the meme goes, you know, 2 sticks of gums and a nickel. That's what the boomers were able to do. And but no, I mean, yeah, look, prices go up. Okay, it's just a fact of life. I realize the cost of living has gone up very quickly in the last couple of years, but that's the system that we live in. We were born into it, and we can try to change it, but I just try to trade around it. All right. But if you want to take another metric in, you want to look at the Trueflation Index. This is a private company, not government, that looks at a much larger composition of data that is even lower. Now, one of the taglines that was in this tweet that I pulled this from, from their Twitter account, was, "This could possibly signal a deflationary event on the horizon." What is a deflationary event? Well, that's a crash, they all talk about. But if we actually look at the dollar going all the way back to 2008, you know how when we talk about trading and investing, buy low, sell high. If this was any other chart, would you buy or sell it? I mean, I'll let you think about that. I mean, but higher highs, higher lows. I mean, this is a multi-year chart. Like basically right here is 2008 going forward to now. It's really kind of pulled back to a support, hasn't it? Don't know, but I find that interesting, especially when you put in the context that a 4-year low. Yeah, but it's also higher than it was, 6 years ago. So really just to sell news and stuff like that. And so when I think about the U.S. dollar debasement trade and people are trying to hedge against it, um, you can be early, and it will also look like you're wrong. So that doesn't mean you're wrong. You could just be early. And also, if you buy and hold silver because or gold or Bitcoin or anything else, if you buy and hold it for one reason and the price goes up, you made money. It doesn't matter if your thesis was correct or not, because you can be right and make money and not even be the reason why it happened. And so that's why I bring to you guys the point that we're seeing a larger metals bull run essentially, as opposed to just silver and just gold. But that's what gets the headlines is silver and gold. And so what that tells me is that there's probably more of a case to be made that this is demand for industrial metals than it is a giant inflationary event. There's just not the data support that this is just because of dollar debasement and mass inflation. It's just not there. It makes for sensational headlines and for people to reverse justify their thesis about why they were in silver for 10 years and it did nothing, or why they're, in gold or whatever. But it's my opinion. I'll just give it to you straight. It's industrial metal demand fueled by derivative panic, gamma squeezes, all the little fun things that people do to bet on the price of things, all the options, all the futures contracts, all that interplaying to create a massive, massive explosion in volatility. Um, but it doesn't. Well, and now we see the result of it because volatility is a double-edged sword. There we go. What goes up must come down. All right. But it came down to a support that we could have easily seen, as it seems like Swanson did. Bam. I do feel like I missed that. Like I said, today I was handling some other business and then I got a flat tire. And man, that was a really good, oh man. I'm going to be honest. I have not found a really great trade this year. I'm at a small down going into January, but of course, that's what the market is doing essentially. But I actually like starting the year in a little bit of a hole. It gives me something to work out of. I just haven't had any big, solid, perfect setups that I want to play just yet. But the year is fresh. Actually, the year, hold on, hold on. We need to talk about the January effect. Every year, I make it a point to go back and look and remind everyone that January is a very important month. Hold on, where did I do that little succinct bring down? Let me find it. I did the research earlier. I was talking about this on Discord. By the way, guys, if you do the like, share, subscribe, and hop on Discord where we talk about this stuff all the time. But January, come on, no, that's not it. Okay. All right. So essentially, here is the superstition around the month of January. It's said that as goes January, so goes the year. In other words, if you have a positive January, you're more likely to have a positive January or positive year. If you have a down January, in other words, the bar closes red, you are more likely to have a bearish year. Now, of course, the stock market has a very positive drift to it, but just to update the data, I went through and had ChatGPT. I pumped in all the data from, go away. I pumped in all the data from into a spreadsheet, OHLC, for months, just to confirm that there is actually a drift in the result of the month of January that is not, excuse me, there's a natural drift of the stock market up, but the January effect is actually significant from it. And so, but it doesn't mean that just because January is going to do that or not. Let me actually find, what was that number? I think it was, if you have basically a, let me see, let me go back up through my thing. So, aha, here we go. Here we go. This is a good little thing for the data. So essentially, if you have a down month of January versus the year, then the average return for an up January for the stock market is 15.5%. The median return is going to be 17.3. If you have a down month of January, this is going back from 1965 to 2025, taking in all this current latter year data, you have an average return of minus 0.3% and a median return of 0.6. So big difference. Now, of course, there's always that positive drift. There's always a high and low that falls outside of, the norm. You can have like April of last year where you're down, how much were we down? A lot. And then we end the year positive. It still counts, but we're just looking at just this raw statistic. And now, drum roll, please, how did the month of January close on the SPY? Because yesterday, or was it Thursday? Yeah, it was Thursday. Yeah, Thursday. Big old down day that made that monthly bar go red briefly. Oh, here we go. No, I want the party emoji. Give me the party emoji. So, up month. Ladies and gentlemen, we have a more likely than not probability that the year 2026 will close higher than it opened. So that's one thing. That's the good news. That's the good news. That's the good news. That was a little self-interruption to give you guys some good news. Okay. Let me take a step back, because let me give you some fun. Let me give you some fear, uncertainty, and doubt. Okay. And I haven't, at the end of my presentation last night, I got to give credit to Brother Casey for pointing out to this. He's a connoisseur of FUD, fear, uncertainty, and doubt. He asked me to bring up charts when I was looking at silver and gold, because as we know, silver, gold, nickel, copper, platinum, everything like that. So because we can see that there's been instances in history that were similar, right? Where silver has a big blow off top. Now, case in point, if we go back and we look at silver in the last cycle, 2008 to 2011, again, 50% hold right there. Pretty nice, huh? So really good luck. This is why in my live streams I talk about 50% volume profiles and false breakouts. There's nothing else I believe in more than those three different technical indicators. They just work. They just work across everything. Now, do they work to make it come up and retest the high? No. But do they work to give you a possible entry? Yes. Also, do they work to let you know when that entry has failed? Yes. So if you are getting into, now, I think much larger VP POC at 49 if you match the date range with the fib. So what I did there in just a moment ago was I measured it from the April 25 run up. So that is a legitimate 50% that you can look at. But if you want to go to a much, much wider, like on the monthly chart, I wouldn't start it all the way back in 2020, but one could. One could. This is where the 50% get a little arbitrary. Obviously, price is respecting the 74, right? But the farthest I would go back would be the 2020. We're not gonna do this 2022, okay? Because if we go back that far, we might as well incorporate like really when this trend began. That's what I try to do with 50%. And so the next level, since I missed this, I wish you all the best if you got in at 74. But selfishly, I'm going to be watching to see if we can get another pullback of 66. That's going to be the real test of this whole multi-year trend. Okay, so we may not get that. We may not get that, and that may not actually match up nicely as well as it did for the volume profile there. A little messy because let's just look at the relevant time in particular. Yeah, honestly, I don't hate it. I think that you got like a nice little double level there. Volume profile from all this action. Now I knew better than to short it back here, but it was tempting. It was tempting. It was tempting. Now another thing to consider. This is actually what I'm going to look for because I'm a contrarian. Like it's good if you want to buy it on a retrace. That's what I'll do. But I really want to see if this goes through the anatomy of a bubble. Okay, what is the anatomy of a bubble? I need to make my own chart of this rather than Googling it every time. But this is the standard one that you'll find. I have my own nuance to add to this. But essentially, let's see. Let's clean all this up. Here's what my plan for silver is right now. I've missed the pullback long. That's the one I prefer, actually. But you have, and it's so uncanny that, and this is why I look at price action neutrally from what it is. I try not to get too into narratives. I try not to get too married to reasons because I see so many times where doesn't matter what the instrument is, price action, because everything is traded by human beings. We're all the same smart monkeys with money. Now, we all fear, we're all greedy, and we all love to be with the crowd, and we all love to agree to narratives. It all just kind of, it happens again and again. Everything rhymes in the world of finance. And so when I can overlay an anatomy of a bubble, we look at a long enough timeline, we can see where we have the takeoff, the first sell off and the bear trap, the enthusiasm, the new paradigm. Oops. I lost my line. It's fine. And then now what I'm going to be looking for as a trader is I'm going to be looking to see if we can get some kind of action on the retest. The key thing here, as Swanson is in from the 50% from the launch point of there to, wait, no, it was April. Where's April? Why did I lose that? Is that? Oh, there it is. There it is. Yeah, sorry. So there's two trades in silver right now, and this is what I was waiting for. Like I cannot buy something or sell something when it's doing something like this. I know better because if you buy it at these points right here, now you're going to get something like this. Like you're just chasing at any point in a parabolic that you try to jump into it. Don't ever do it. Now things get interesting. Now things get tradable. This is where I worked. So the 50% is, of course, the level to enter in as a pullback. But now that that's been hit and held, now I'm going to look for some kind of action on the retest. We're going to see how it tries to get back to that high. I'm a will see Chad about things. We could go on and make a new all-time high on silver. It could go to 700. I know a lot of people that would love that. I don't know. Anything can happen. But the first thing it has to do is break that high. And so I'm going to be looking as this retracement comes down, hits it, and then comes back up. And then we're going to see what it does as it attempts to get to that high. We'll look for some signals. We'll look in the volume profile for that level. But that's going to be the next test. Now, of course, if it comes up and it doesn't punch through that level and it just comes up a little bit or a little bit, and then it starts to falter. At that point, we do know that the bubble has ended. And that's the way I'm going to look at it. And then we'll see what happens when it comes down and retest this 74 again, and more opportunities abound on the capitulation. So that's what we'll look for. But again, so it's either up, then we'll test it, and then we'll go for the break. And it needs to happen the first time too. That momentum can't get destroyed if you really want this thing to go up. Because look at it this way. You need this momentum to come back, hit this 50% level, hold it, come back up quickly, break that high to keep this party going. If you have any kind of slowdown, if you have any kind of anemicness or any kind of laziness about it, you're not going to have the energy to take this to 200, 300 and onward. You need that energy to punch it higher. Otherwise, you may get up to another high of like, 130, 140. It wasn't worth your time. It wasn't worth the risk. So it needs to happen very quickly in the next 2-3 weeks. Basically, I think they have like a February delivery date for, I don't know. I don't, there's some delivery date that the silver people were talking about. I'm just looking at price. All right. So cat domination. You're mostly buying equities, buying a little Bitcoin, but hoping for a bigger drop crash. Yeah, we have discussed it. We have discussed it. So that's what I'm looking at in silver now. That's of course our headline for today. All right. So let's we looked at Bitcoin. I talked about how it's metals. Oh, I didn't give you guys the FUD. So remember how we said that metals were all going up? There's your copper on the daily. Let's do a weekly so it's nice and simple. And of course, my buddy, he pointed out, he asked me, hey, go back and look at the metals in 2008. Dum, dum, dum. This was the 2006, 2008 on copper. And of course, everyone, well, some people remember 2008 on gold. $2008 on platinum, up and boom. You get the idea. Look, may you always live in interesting times. This is every year to me is fascinating because there's always some new narrative, there's always some new meme, but you need to come into the year presuming that things will normally be okay. I know this is a little dangerous for when it's not, but the market has a cyclicality about it. And one of my favorite quotes that I repeat all the time is, I'll just tell you two, markets are born on pessimism, grow on skepticism, asterisk, mature on optimism, and die in euphoria. I love to be bullish when the market and the memes are skeptical, because that just means the market's just going to keep on going up. We'll talk risk markets, that is, okay? And so anytime, and that's why whenever the silver run was going and I began to get skeptical myself about it, I mean, you know me, I'm looking for some kind of little evidence of weakness. And so I got skeptical right here. I got skeptical, but I knew better than to act on that. I knew better than to short just my skepticism. Now though, we had a little bit of euphoria, and that ended that. At least for now. At least for now. Anything can happen. Anything can happen. All right. So let's see. I did have a question about MicroStrategy during the thing, and I feel bad for the guy because this, by the way, these smiley faces are me talking to somebody describing my feelings about my MicroStrategy trade that I put on in 2024. Very, very happy April of last year, very sad summer of last year, and finally closed it out. The next volume profile level for MicroStrategy is 131. I'm sorry, Unreal. We talked about it, what was it, 2 weeks ago? Hashtag I don't give financial advice, but I was talking to a good friend last night who has been an extremely bullish MicroStrategy fan, and he's starting to, I wouldn't say, how would I describe how he's feeling? Well, he's a very data-driven person, a little bit of a nerd like me. He loves spreadsheets. I love spreadsheets. And he has a whole spreadsheet that calculates the MNAV and how much Bitcoin he is getting for owning MicroStrategy. And his concern now is that MicroStrategy, instead of using their accretive dilutive tactic to buy more Bitcoin after they sell their shares at the money, in other words, create more shares and buy Bitcoin with their preferred offerings, with their, cash product, like cash products that give you 11% interest, no risk. But his complaint now that they've started building up a US dollar treasury, or US dollar, ostensibly to give people confidence that they can pay the dividends for years in the future. What that's actually done is that's not just decreased, or it's kept the MNAV the same, but it's decreased the Bitcoin per share. And the whole reason that my friend was in MicroStrategy, is some people are that really, really think about it and done the math. They're in it because they look at owning Bitcoin and using MicroStrategy as owning as a proxy for owning Bitcoin. And now, MicroStrategy, by breaking their own rules of not purchasing originally they were going to only purchase Bitcoin at a 2.5 MNAV. In other words, when their net asset value based upon their Bitcoin holdings, their stock price was 2.5 times their Bitcoin holdings. That was the only time they were going to dilute their shares. And then 2 weeks later, they just decided, we're doing whatever we want. Because that's how you run a business. You tell your shareholders one thing, 2 weeks later, you go back and it's like, that thing we said we were going to do with your money, it's just a suggestion we came up with. We're not going to give ourselves any rules. We're going to buy every dip. Yeah. Why would we not buy this dip? This dip that keeps on dipping. When I dip, you dip, we dip. Okay, anyway. So now the Bitcoin per shares that MicroStrategy shareholders has decreased. On the other hand, that one of the most bullish MicroStrategy friends that I have has started turning skeptical. I love the guy. And so I'm not mean to my friends, but at the same time, I do listen to my friends speak, and that he who has been, he made total fun of me. Like, he kept on making fun of how much money I was losing. It's fine. I'm a trader. I know how to handle losing money, but he kept on making fun of me as I was losing money this whole time. And then finally now when I close it, he didn't even believe me that I made money, but okay, whatever. Now, he who is the most bullish MicroStrategy person I know has begun to get concerned and starting to, I don't know if his resolve has gone away or not, but as a contrarian, that was what I was looking for a bottom. Because when you have the most bullish person finally starting to get influenced by the price, and then you're going back and you're justifying it with a narrative, that's when the bottom can be made. The bottom is not made here because the reason it didn't stop here is because I remember very distinctly this is a buying opportunity. And frankly, I didn't disagree because, well, we can't do that, because that was 165 was the volume profile level for the launch period. Okay. But now that you've lost that 165, the next level that can potentially hold it up being 131 is there, not too far away. And then below that is just, well, again, takeoff, first sell off, bear trap, new paradigm, infinite money glitch, bull trap, return to normal, capitulation, and maybe we're in despair. I don't know what I don't know the future, but these are the signals that I look at. So to put it all together, there is a hint of despair, which could be a bottom. If that gives you some hope, if that makes you feel good going to the weekend, that's fine. But again, as I've said to those that may have come from the irresponsibly long MicroStrategy Twitter group, which what kind of group name is that? Where you acknowledge that you're making bad financial decisions in your title. The worst thing that can happen when you get into something and you leverage yourself up to the tits and then you win, what did you learn? You didn't learn anything. You're just going to do this again in a few years with the next thing, and then you're going to lose more. Sometimes it's just best to take the pain. But that's not financial advice. I'm going to tell you what to do. All right. Let's see. What to look at. Wow. Yeah. Silver was at 120. Now it's at 78. Gold. One more, Peter. I saw, hold on a second. So I saw this today. I have to say, actually, one more thing I got to talk about silver. So one of the things that I did was a little bit of research on a friend of mine who is a expat that is a trader in China cited that there was a big premium between the Shanghai and the COMEX. That's the Chinese and the American silver trading exchanges. And I looked at this over the last 10 years, and that the premium was 16%. In other words, that the Shanghai index, Shanghai index of silver was trading at a premium of 16%. In other words, there's an arbitrage there possibly. Either way, I didn't see anything wrong. And his thesis was that a lot of this metal demand, based upon the premium, was coming from China. So I looked at the data, I put it together in TradingView to do the comparison. It requires a little bit of math there. You got to convert the kilograms to ounces, and you got to convert for the currency, but you can see what the premium is. And so I had this chart up, and I said, it's not there. It's not. I don't know. I don't know if that's true or not. But then I redid the data for today, and then this is the premium. China wants silver. Now, this volatility event that we had in silver, as I said, is mostly probably a function of derivatives, end of the month. Someone decided to take some profit. More people try to take profit. You have a cascade of gamma acceleration with all the options and all the futures and all the things that come onto it. But the demand on this, or maybe they have do they have Fridays in China? I don't know. This kind of speaks to the narrative that China still wants all that silver. And that's, I don't like narratives because you don't know if they're true. I mean, you can't believe the stuff that you read on social media. You just can't. But I do like to look at data and charts and price action. And when I see that the price, and I love arbitrages, by the way, I wish I could find arbitrage in the real markets. Done a lot of it in video game markets, but Unfortunately, people with billions of dollars of infrastructure and PhDs in physics are doing the arbitrage on the real markets. But I love arbitrage opportunities. They come around so infrequently. There was actually a Bitcoin arbitrage opportunity back in 2017 that you could buy the futures on one, or you could buy spot and then sell the futures on BitMEX. This was a long time ago. But there was like a 28% premium then. It was fantastic, obvious, during the 2017 rally, I do believe it was. But I love arbitrage opportunities because you can capitalize on them. But I can't really do capitalize on this one. I digress. China wants silver. China's demand for silver. Let's just bring that up. Hold on. Let's look at the chart for that. So, what? Okay, hold on. This live stream did become about silver, didn't it? Honestly, now I wish I was in that pullback. See, I'm getting caught in my own narrative there. Yeah. All right. So this is SHFE AG. There we go. Let's do a side by side. Daily. So it did have a pullback. However, let's see what the relative pullback was. Let's measure this. This is how we can cut through everything. So from the high on the silver index, which by the way, this on the, back to the topic of the discussion, the reason I talk about the technical setup is because we can see it in other instruments going into the future, and we can take advantage of it. Not just, we can't take advantage of this false breakout on silver here, but the first thing I notice when I'm going through the price action is while you had a classical false breakout, in other words, the bar from Thursday, yesterday, the 29th of January, went up, pierced the high that it established on Monday, and then closed back inside it. You did not have even though these wicks came up, it's not quite as clear as that one. There's still more demand coming in. Actually, those were false breakouts. Never mind. I'm confusing myself. Anyway, moving on. Forget I said that. This doesn't look the same. See, I was going to play tricks on you. Okay, so basically, let's do to the close. So the silver pullback was 21%, and the U.S. market pullback was 35%. So same asset, same correlation. But let's go back to where we let's go back to November. So how much has this gone up since November the 21st to the high? Because this all could be relative. We could just be making stuff up. 153 comparable. Yeah, actually, it just represents a premium. There is a premium in the Chinese market. It's not so outside the realm of speculation, but it does lean towards the narrative that this is Chinese demand. It does. So that is what I am choosing to loosely believe is going on. And this kind of goes back. It's not that after 10 years and cool inflation data that suddenly banks decided that we're going to start using silver coins again. No, we're not using silver coins. Okay. They're heavy, and people are just going to hoard them anyway. Just, we'll see. All right, let's go through the symbols. Let's knock through the symbols. You got a sign on your 300 MicroStrategy put. Bruh, why didn't you roll it? Like, or how far out did you have it? Bruh. Well, now you own MicroStrategy at $300 a share. Okay, so here's what you're going to do. All right, let me help you out here. Wheel. Do the wheel. So what you need to do, March 20th, I still have one left at 280. It's really kind of incredible that you got assigned. Well, it's not actually incredible because you were so far in the money that you got assigned. No. We're not going to buy it back. No. It's yeah, you got shares. Okay, so here's what you're going to do. I want you to look up this. I'm going to give you the quick dirty on it. Are you familiar with the wheel strategy is? The options wheel strategy. Okay, you read on it. All right. So generally speaking, what you want to do in this situation, because you've been selling puts, earning premium, and people do this all the time, and it's basically the opposite of a. Let me see. Hang on. I'm trying to do an illustration here, but all the. Never mind. I was going to draw a wheel on the chart here, but you guys get the idea. We're doing a wheel, okay? So you sold a put because you didn't want to buy the shares. That's fine, and you earned hopefully a little bit of premium in the process. But now you got to sign the shares. So rather than sell the shares and take the loss, what you're going to do is you're going to turn this into a covered call. So you're going to sell a call that is now out of the money, and so essentially you did the 320. Do a little bit of research on this. I haven't looked into this in a long time. I can't really lay out a whole strategy for you, but you could also just sell the 320 call for March or whatever, and you're going to collect the premium from that. Okay. And then eventually that's going to expire, or part of the premium is going to go up. And then you can do the April, you can do the May, and this whole time, based upon your shares, you are selling premium against it. You're generating income. You're basically just getting paid a dividend for holding on to these shares. I know the premium is going to be very low. I'm not saying that you're going to make up your $12,000, $14,000 a long time. In fact, it could take you a very, very long time. So get away from. Okay, all right. I'm gonna give you some tough love here. Okay, we talked about this 2 weeks ago, and I told you that you can't just sit around and wait for something to come back to break even. That's not going to work in trading. That destroys so many people. So I'm just going to tell you right now, that money is gone, but you have shares of MicroStrategy. So what you're going to do is you're going to take those shares of MicroStrategy and you're going to have them earn you a little bitty dividend. Okay. It's just like if you went and bought, you had this high flying stock that you thought was going to go up a bunch, was going to make you a bunch of money. That's not going to happen. You now own Coca-Cola. You have bought Coca-Cola, essentially. You have bought a sugar water company that gives you, let's see here. What's the dividend on I'm just picking on Coca-Cola. I own Coca-Cola, as I do like to have things that are not going to have a realized volatility of 100% a year. So the forward dividend and yield on Coca-Cola stock is 2.78%. That's actually really good. That's actually really good. Okay. Okay, the money's gone. Stop thinking about the money. You now have an asset. You now have an asset. You have 100 shares of MicroStrategy. That is an asset. That's like having a piece of property. It's like having a gold bar. It's just not worth as much as probably going down. I'm sorry, I'm being mean. Hold on. What you're going to do with that asset is you're going to sell calls against it, and you're going to get you a little small amount of money every month until, as you hope, eventually can come back up, and then you can get assigned on those calls and they will get called away, and then you'll have your money back. Okay. Now that could happen or it could not happen, but that's what you're going to do until you get your money back. Don't Now, if you don't want to take that $12,000, if you don't want to accept that loss, then don't go and get greedy and start selling the 160s or the 180s or even the 200s, because at some point it is going to come up and it's going to call those shares away, and then you're going to be out 120 times. You're going to be out $12,000. Okay. So if you want to make this money back, what you have to do is you have to look at this as a long game. You got to say, all right, I'm in the red this much. Hey, what's up, Corte? You got to look at it. I'm in the red this much, and I'm gonna earn $1 this month, $1 that month, $1. It's more than $1. Maybe it's $20, maybe it's $30, but you're gonna earn that money back month after month, selling these calls against it, and you're gonna just earn it back. Okay. Or you take the loss and you put the money into something else. Those are your options. You're either going to do the wheel strategy now that you have these shares assigned, and you're going to sell covered calls against it at the price that you bought them at until you either make that money, $14,000 back over the course of the next 20 years. I don't know how long it's going to take. Okay. Or you wait until it comes up to 320 again. And so I think probably based on what you did to get yourself in this situation, you're going to hold on to this thing hoping for break even. That's fine. Just get paid for it. So that's the bottom line. If you're going to hold on to try to get the money back, at least get paid for it. But remember, you can't go and start selling for more premium here, because if you get called away below the strike price you got assigned, then you do essentially realize that loss. Does that make sense? You have over 1,000 shares now. Well, you're going to be selling a lot of calls, 10 at a time. I mean, if you can mentally remove yourself from the loss, the implied volatility is going up. And now you have earnings coming up on MicroStrategy, which doesn't make any sense. It's not like they're going to announce any earnings. Actually, they could announce earnings by announcing that they're going to make a new rule about how they handle their Bitcoin and then change it 2 weeks later. But you're at least not in a low IV environment. You're back above average, so you're doing pretty good with the implied volatility. You're getting a higher than average premium, but you're just going to have to be consistent about it. And right now, as of the close, this might not be entirely accurate going into next week, but let's look at the. So here's some other pointers for you. Okay. Your sweet spot is 45 days to expiration. Okay. That is when, and let me show you why. So what you're doing when you're selling any kind of option is you are trying to bank on theta decay, time decay. And time decay has it's a formula, an exponential curve. So at 120 days, you don't have that much theta decay. That's why when I buy options, I usually try to go for 120. I'm not doing it. Maybe I'll do a 0 TT if I'm feeling cute. But if I'm trying to play an option, it's going to be 120 days plus. At 90 days, you're getting more accelerated theta decay. At 60, but really the sweet spot where that theta decay starts to ramp up really quickly and you start getting more and more time decay, that's 45 days to expiration. And so whenever you're looking at option sellers and like Tasty, I learned this from the Tasty trade people. By the way, best education. People used to pay thousands of dollars for that education. Go and look up Mike's whiteboard on YouTube. Best options education you can get for free that money used to have to buy a decade ago. Mike's whiteboard by Tasty Trade. That's where I learned this from, but it's math. Where at 45 days, you're going to get the maximum acceleration. And then at some point, you're not going to get anything. It's just, most of it's already been expired away. And so what you want to do in this strategy is basically Monday, you're going to have 46 days, 46 days expiration, maybe, but you're going to go, we got to go far out, don't we? Let's go see what we're going to get for the 320s. We're going to get $50. $50 times 10, you're going to get, that's not bad. $50 times 10. Yeah. So you're going to sell 10 shares for your 1,000 shares, or 10. Yeah. You're going to sell 10 calls for your, this isn't bad at all. You're going to sell 10 calls for your 1,000 shares. You're going to get probably a little less than 50. Let's say you're going to get 45. So you're going to get $450 of premium, okay, for 1 month. Then at 15 days to expiration, you're going to have most of your theta that's decayed away. You're going to roll those out to the Aprils, and then you're going to try to hopefully get another 40, 45, $50. And so and you're going to close them early. Okay. So you're not going to get the full $50 out of each one. It's probably going to get down to like 15. So you're going to maybe, let's say you're going to get 30. All right. So for your for your 1,000 shares and your 10 calls that you're rolling every month, you're going to be getting $300 a month for your 1,000 shares. Now, that's not going to, I was being a little exaggerating, but if you're down $14,000, it's going to take you 3.8 years, but I mean, you're getting it back. Plus now you're in the shares and they can come back up to your 320 strike price and you can have them called away and you can do break even. So that's what you get it. You're down almost 200,000. Okay. We're just going to work we're just going to work from here. We're not going to focus on the losses and what you're down. You with me? It's gone. Money's gone. We can only go forward. All right. So like I said, you got two options. You take the loss like you should have done 2 weeks ago, or not, or talk to me about this 2 weeks ago. All right. Or you're going to treat these shares as an asset and you're going to get paid to hold on to them. All right. Those are your two options. Okay. Okay. So you're going to hold it. All right. Do you understand what I'm saying? You're going to do the research on wheel. You're going to get comfortable with it. You're going to lay out a plan and you're going to execute consistently every month. This is going to become a little business for you that you're going to do. And you only have to do one thing a month. You only have to do one thing a month. You only have to roll them once a month. That's saying, and you keep it really simple. Whatever that 320 is, you just keep doing it. It may be more, it may be less than $50 per. So if we're making $300 a month, I'm not going to do the math for you. Don't worry about it. Don't worry about it. All right. All right, guys. Let's look at symbols. I don't know. Talk to me. Send me a message on Discord. We're talking about this more. Let's look at symbols. All right. Let me get at my list here. No, Zygor. I'm not in MicroStrategy. I'm not long or short at this point. All right. Let's see here. Where do I see it? Well, so no second best. Hopefully I did answer your question about MicroStrategy. I'm starting to see, there's clearly a bit of despair. Doesn't mean I'm ever going to long the stock. Someone brought this up to me. You know what? I'm not going to spend more time on MicroStrategy. It's just, if you want Bitcoin, buy Bitcoin. Look, I had kind of a heart-to-heart, brother-to-brother talk with my buddy that was big on MicroStrategy. I actually reached out and I actually took his hand and I said, I put it in mine and I said, my brother in Christ, when did you get into Bitcoin? He said, 2017. I said, well, why did you get into MicroStrategy? He said, well, I wanted to earn a little bit more on my Bitcoin. It's like, I got into Bitcoin in 2010 and I pretty much got out after 2013 because I couldn't sleep. I was losing sleep up at night because of the volatility, and I diversified into other things. And he would constantly make fun of me. He's like, you could have been a billionaire. I'm fine. I'm doing all right. I'd rather have a job, frankly, than be sitting around trying to manage capital and do things, or just play video games. So I can't really say that I've really done that much other than that since I became a full-time trader in 2013. But still, I also tried to earn more than what Bitcoin was giving, and it stressed me out. And so this whole MicroStrategy thing has just been me as an old Bitcoin boomer watching people try to get a little more. We didn't learn from Celsius and the earning yield on your Bitcoin. Now you don't have your Bitcoin, it blew up. Whoopsie. Where do you think that yield was coming from? It's called risk. And now I'm watching people in MicroStrategy who bought into this narrative that, oh, if you put money into MicroStrategy, it's based on Bitcoin. Who here remembers BitConnect? I'm not going to yell it, but go look up BitConnect guy and look up the BitConnect scam. Guys, there's no shortcut. You're not going to speed this up. And the only way that you're going to make outsized returns is by taking outsized risk. And we're at the fat tail of that with MicroStrategy now. You got sold that you were going to make a ton of money on Bitcoin if you just bought this product because it was based on Bitcoin. And I've seen it so many times before. It was fucking bullshit. I don't care about getting monetized. I hate it. I hate scammers. I hate preying on people's emotions. I hate this stock. I hate talking about it. But I will to teach, and hopefully people listen. But this is going to happen again and again and again. And you know what? And now you guys that have been through a MicroStrategy, you're going to look at the young guys coming in about 5 years, because it didn't take very long since 2022, did it? That are like, oh, I need to make a little more. I can't be happy with 100% in a year. I need more. I need to retire. I hate my job. I want to quit now. Someone will gladly take your money and promise you that you're going to have all your dreams come true. And then it's going to be gone. I hate it. But I don't sell people a dream, so nobody listens. But experience is the best teacher. And right now, look, I didn't know, obviously, in April, I was feeling pretty good about my thesis that this was a scam and it was going to blow up. And I thought I was wrong in the summer, but I knew we would eventually be here. And we will be here again under a new name, under a new scammer. And for those that, for some reason, couldn't just zoom back and look at a chart from 20 years ago on the same damn stock, then you're going to repeat the same mistake again. I don't even have to bring up another chart. I can just look at what he did 20 years ago and know I'm not going to give this guy my money. Wow. You're right, Ernie. He's an honest businessman. Old sailor. I hate talking about this guy because I've gotten told all this time I have sailor derangement syndrome. You're right. I do have SBS. Wait, yeah, I do have SBS, scammer derangement syndrome. I do. I 100% do. Where is that? Where is that thing? You got me on a damn roll. No. Oh, it was on the Discord. God, one of the reasons I hate scammers is because people come impersonate me. You guys know I don't sell classes. I don't sell any kind of signal services or anything like that. But I've had people that have come in and impersonated me and gotten money out of people. So that's why in all my profiles I say I will never ask you for money. And so I make my money trading and investing, but I can't stand scammers. We are a large information refinery. We extract value into an elixir. 2/21/2000. We are a Bitcoin treasury company. We are powered by a Bitcoin reactor. That was the CNBC interview that I shorted it before, but I went hard in this CNBC interview because he started saying words like volatility. Hold on.
Love for you, if you could. It's great.
You know what? You got me mad. Let's listen to it.
It's been a wild run, and boy, have you been.
We've got 35 Bitcoin. Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility, the risk, and the performance off of fixed income securities.
So here he's saying words that I understand: volatility, fixed income securities, stripping the risk. How do you strip the risk from things?
And we're transferring that to the common stock. So our common stock is
I know what common stock is.
2x Bitcoin, 2x vol.
I know what vol is.
So, Andrew, if you want to understand the economics of this, we generate a spread. The BTC
I know what spreads mean.
It's a function of the equity premium, the convert premium, the Bitcoin premium. The Bitcoin premium is the ARR Bitcoin versus the US dollar.
And so at this point, most people that are listening to this are saying like, wow, these are really fancy words. And I know what each one of these words means, but in the order that he's saying it doesn't make any sense. And this is where I realize this is an instance of, if you can't dazzle them with brilliance, baffle them with bullshit. And at that point I knew. Now it took a little while for it to play out, over a year. The difference between being early and being wrong is often indistinguishable. But when someone goes on, first of all, when someone goes on CNBC and starts talking about their just be wary, guys. Okay, let's go through symbols. Let's look at things that can actually make money. All right. So yeah, I'm skipping through it. UNH. UNH obviously had a very bad down day, but I'm in it from 245, this volume profile level here. And so far, I think it seems to be okay for me. I mean, I'm watching it very closely, but as far as the pullback from it itself, if you go out to the monthly and we look, it's obviously not holding the 50% there. Let me clean it up a little bit. So the volume profile level that was the last level it needed to hold was that 245 level. Okay. Now, I definitely look at everything in terms of 50% retracements, and it's in the range of the 50%. Now, I'm not going to let it get below my 245 entry. I don't like taking losses. In fact, I moved it out of one account just so I don't have to look at it, but that ended up actually showing up as a negative 15,000 P&L. So I didn't want to see it anymore, but I'm going to hold on to it. I just had it too big in my actual trading account. So anyway, that's a personal thing. Still holding, and my risk is down below my entry there at 245. Now, I had been interested, by the way, in picking up Humana, but if you'll notice, Humana did not hold its volume profile level. So when they both moved in tandem and Humana had more of a pullback than United Healthcare, I realized, you know what? I don't want to double dip on this industry. I know I'm bullish on healthcare, but I have to take a step back and realize that, you know, United Healthcare and Humana, they're not exactly healthcare, they're health insurance. And so what real healthcare is going to be things that like produce medical goods, or one of my favorites, which is Eli Lilly, which I'm also watching closely to make sure that it's actually doing a false breakout. So watching Eli Lilly pretty closely. Okay. This company is actual healthcare stuff, and it's been printing money for well over many years for me, but I'm watching this actually very closely to see if it doesn't pull back. The last pickup on Eli Lilly I did was back at 640, the 50% retracement back in towards the end of last year. Fantastic pickup. It broke above the high of 972, but now it's kind of stalling out, still holding, obviously. But this is more what healthcare really is, what I really rather be in. But I am still holding on to my UNH because it hasn't really threatened my entry quite yet. So we're going to keep that position open, actually. So, all right, let's go back through and check on all the symbols to look at. Un momento, let me go back up. Again, a MicroStrategy question from No Second Best. When do I start DCAing MicroStrategy? Did you really ask me that question? Airbus. Did Airbus just turn bearish on the daily Ichimoku? That's a good question. Let's look. So, yes, technically it did. Yes, it did. But I don't use it for trade setups. Okay. Yes, if you're looking on the daily, it is turned bearish, but you need to look at it in the context also of the weekly. Okay. Especially when it comes to stocks and longer term positions. All right. So yes, while it may enter into a counter trend, that counter trend on the daily, excuse me, the bearish trend on the daily. In other words, if it breaks Ichimoku and it enters into a bearish trend, where is it going to go? Well, at that point, the higher time frame comes into play, and the same rules of the Ichimoku cloud apply, where you're going to come down, and now it's going to test the weekly cloud. This is the same thing that is happening with Bitcoin. Bitcoin, of course, entered into a bearish daily pullback, or bearish daily trend back in November of 2025. This is after that October the 10th big day. And so it's been in there. It tried to get out bullish here in the middle of January. And of course it failed. Now you're continuing on the bearish trend. But what is that doing? That has sent Bitcoin down to the weekly Ichimoku cloud, which is now holding it up. So it's not bearish on the weekly. Okay. So still long-term weekly trend of Bitcoin is bullish for now. The daily, though, whenever you have a bullish trend on a weekly, a daily bearish trend is going to look like a pullback on that weekly. That's what I'm trying to say. Does that make sense? Hopefully so. So in any time that you're doing an analysis of Ichimoku on the daily, you need to make sure that you understand where you are on the higher time frames. You also have to understand that because you're in a bullish trend, let's say that you were to do a trade, you were to do a bearish trade, you were to take a puts or whatever, you would need to understand that your support, in other words, your target for that bearish trade, very easy to see because Ichimoku is based on 50%, is going to be at 173. So if you want to play this breakout, you have to understand that you're playing it down to the highest probability. Could go further, but the most logical target is going to be 173, which is actually a very good level. So I'm going to set an alert there. Hold on. I need to hold on a second. Okay, so this was we'll say Discord live stream 1/30/2026. I'll look your name up here. I'm in streamer mode. I can't see you right now. And I'll send this to you on Discord. By the way, guys, if you're liking this, make sure you do your like, share, subscribe. Yeah, I can't see your name in streamer mode right now. I'm just seeing the W, but I'm going to give you credit for that. But no, that's a really good level for it to come back to, honestly. You got a previous high. You got a nice 50% going all the way back to April. Weekly is going to become a weekly pullback. Let's do the volume profile of that trend. It's gonna, we don't have really matched, but the 50% is enough for me. Not perfect. Look at that though. Let's see if we go a little more granular. Missed it. That little spike low depends on property exchange. If it actually hit that volume profile point of control to the penny, but definitely the thing is, if you break this low, it's going to go lower, but then you're going to get held up by this 50%. So I like that level actually. So, all right. Yep. There you go. All right. Got a lot to look through here. We did UNH. I'm hodling. Let's see. Microsoft. I think I talked about that. That was in the small account challenge and it got stopped out. So I'm out of that. Again, that was yet another. It could still hold, but I'm trying to be very, very disciplined in starting this account. And so no patience for losing. None. Moving on. I only want winners. So Microsoft, it hit a 50%, but it closed below it. First of all, it hit it when I got in on January the 21st. Then, of course, it was looking pretty good. And then, of course, it got tanked by earnings. It's not just because it went down. It's because it invalidated my entry. And now this has entered into the valley of risk. So that 50% showed it was there. It respected it, but now it's come below it. I don't know what's going to happen. That's the problem. I'm outside my rules. I don't know when this thing's going to turn around. I just will look for something else. Always the best thing to do. When it invalidates your entry, just take it. Just take the pain. Move on. Move on. So we'll find another entry. All right. Got a couple of lists right here. UNH. We covered that. FISV. Yikes. I think we looked at this because I've already drawn up. Yikes. I think I looked at this last week, and this is on a weekly. So if you're playing a knife catch, if you're trying to catch a falling knife, then what I try to do is I look for this kind of situation where it finally starts to give you a little bit of upward momentum, and then you take the 50% of that and you hope that it does something like this. So that's what it's doing here on the weekly. You got earnings coming up on the 9th. That's very, very close. That's just next week, I do believe. No, 2 weeks from now. So you're probably gonna have a hard time making any money on earnings. You could take an entry here. This trade's not for me. I just don't have. That's a company that's in trouble, which can be a great opportunity. It's just not for me. It's just, you got to go back all the way. It's just, what did they do? So this is where I do kind of want to know the fundamental story. What did Fiserv do so well for so long to have a chart that, was it fraud? Because like when you have this kind of like regular, amazing up and to the right performance, and then it does something like this, it's like, is it fraud? Did they get in trouble for something like that? Yeah, not quite. It doesn't quite look like MicroStrategy, but this looks like a company that was cooking the books. Hold on. What happened to FISV stock? I'm gonna ask ChatGPT. Plummeted on last year. A primary driver was a weak Q3. That earnings miss, strategic reset, leadership changes. New leadership launched strategic reset, which initially spooked markets. Wow. Earnings misses, reduced growth expectations, and market disappointment with guidance. That's a big punishment for that. Wow. It's not fraud, and the stock is dead. It does have, if we kind of zoom out and squint, it's just a lot of levels to choose from here. By the way, anytime you go lower, because of the way that volume profile calculates, it's going to always show the POC lower and lower, because it's going to be a math equation, and the lower the price that it's dividing against the volume, it's going to have a lower number. So that's why when you're doing long-term things like this, you kind of have to go in and look for the highest points, the different levels. I mean, those are going to be the levels. And then the next one I'm going to note is going to be here. obviously pushed through that. 64.22 is a level. I'm not mad at you. I'm not mad at you if you do a Fiserv. I wouldn't put this in my, serious account, but these are the kind of things that I like. That the company's not going out because of fraud, that's fine. As long as you're still in business, it's fine. And then you're at a level and you've done, the reason I like this setup here is because you know when you're wrong. You have a big, juicy, you can either take it from the drop low, or if you're going to do a long-term trade, you can say, I want these guys to come back to 149. I want these guys to at least recover half of their mistake. And so what you can do is, if you're going to structure a trade like that, if you're going to structure your risk, how much you're going to put in, you can grab it here and you can say, I'm going to take that 50% up to here. And then I'm going to give it myself a 3-to-1. Nice little standard 3-to-1. Let your stop be really low. But more importantly, you got $27 a play here. Let's say, if we're playing around, I'll want to risk maybe like $500 on it. So divided by 27, that's 18 shares that you're going to buy. Okay. 18 times 65. That's going to be $1,200 of capital you're going to put towards it. That's how I would structure around. That's the kind of, that's what I call like a play trade. All right. And so, you do it smaller. Sorry. That's $500 is like, that's the smallest amount that I want to, that's the most for a weak conviction trade that I want to put towards it. And so that's how I would structure a trade like this around it, if I'm really trying to catch this knife. So as much as I'm knocking it and I'm really sitting here thinking about analyzing it, anything can happen since they're not actually going out of business. That's not why, because you guys know I love Dollar General, and Dollar General looked the same way last year. When I said I'm buying Dollar General, everyone was like, what the hell are you doing? Dollar General also did a massive failure, but they're not going out of business. And so it's not fraud. If it's fraud, I'm going to stay away. But if it's just people have evaluated this company as it's not very valuable anymore, it was very obvious to see the floor of Dollar General here back around from September 14 to 18. That was a nice volume profile floor, which I'd already seen ahead of time. But the actual catalyst for this was a 30-minute spike that happened in, I believe, March the 10th of this year, of last year. And since that point, the reason I started liking that Fiserv is because whenever you show me something like that, which looks like this, I let my imagination run wild to think I can do this. And since March of last year, when I got into this discount retailer that everyone had written off, and everyone was trying to get into Palantir and Nvidia and MicroStrategy, etc., I'm doing boring old Dollar General, and it's up 100%. I doubled my money, basically buying what everyone thought was crap. So I like to do that. I do not like the high flying stuff everyone's talking about. And I don't hear anyone talking about Fiserv except you, Melvin. I kind of like it. I do. Mainly because I can structure my risk around it. Now, what I'm going to do is I'm going to keep a very close eye on my wait, are they still in the S&P 500? Is still a constituent. Okay, so these are going to come up on my scans about the S&P 500. So I'm going to be looking for 30-minute spikes. Let's see if we've had any. See how spiky it tends to be. Okay, we've had a few, but it looks a little choppy. Let's go out a little bit. Let's see what the volume profile area is for the low that it made. Obviously, it's going to be down there. We could try to, if we could either do that 50% pullback there, or we could try to do it at the last possible level. And that's hard. And that's a big earnings gap, isn't it? Jeez. Hey, at least they were honest. They didn't try to hide what money they weren't making. So either 61, there you go. So that, well, I would watch this for a setup. You could also say, if you're looking here on the 30-minute, you could wait for an Ichimoku breakout, which is if you're playing a weekly trade, see if you can get this thing to come down and then break out on the 30-minute. Basically, your cloud would look something like that. And then you can get some confidence that it's going to go up. So try to make it do that double top. So I'm intrigued. Yeah. All right. Let's keep it rolling. Can't spend too much time on one thing. Comcast, everybody's favorite internet service provider. This is, hold on. We're going to go all the way out. Let's take Ichimoku off. Let's take spikes off. And let's see, where are we at the 50% for this big run here from 2009? I think it has already hit it. Yeah. So this is going to be a no, because you had an opportunity in 2022 and it tried to recover. Look, when you own stocks, you only want to own winners, right? All right. Like I said, example I used earlier with Eli Lilly, when it pulled back and hit its 50%, it went. Eli Lilly is a winner. I like Eli Lilly because it wins. Okay. Waste Management is another one of my favorite winners. Grabbed this a few weeks ago in November. Again, now it still needs to prove itself, but notice what it's doing. It's making its run to retest that high, and then I want to break it. This is what winning stocks do. They hit their support, they hold it, you get in, and then they go up, they retest the high, they break it, and they go up forever. That's this kind of stocks that you want to have. Now, Comcast didn't do that. Comcast had his opportunity in September 2022. It tried to go up and hit the high, but it said, eh. And now what's it done? It's come down. It's respected that support level again, broken below it. Now it's coming back up to test it from the underside. And more than likely, it's going to hold it and it's going to enter what I call, you guys know, the valley of risk. Now, anything can happen. It could go up. But as far as this being a winning stock, it should have already been back at 57 and gone up again. Just pure price action. I'm not sure what they're doing. I have Comcast. Maybe I shouldn't say anything. They'll cut me off. But as far as the price action goes, if you look at your winners, they don't do this. So this is a no. This is a no for a long. When we get cute, you might be able to short that 31.55. Nike. Well, by the way, if I was going to go long Comcast, going to be when they either hit $9 or $8. Wow, that's a bit extreme, isn't it? That's on the far low. Let's do the trend up. Hold on, let's do that trend up. Not saying it's going to get there, but like that would be, this company is dead, I'll take a risk kind of level, way down there. And you don't think you can get there. I was talking to somebody today on Discord about how they thought that a Palantir pullback. Palantir, by the way, I'm out of my Palantir. Got out this week. Thankfully I did, because I've been kind of dragging my feet about getting out of Palantir, because it did a weekly false breakout, and I was trying to give it a little bit of time, maybe letting the narrative, but when it came back up and held 190 and went down, and then we got into this week, I was like, you know what, that's enough proof for me, out. So now it's probably going to undergo a pullback. Where would I like to see it? I would like to see Palantir come down to maybe 106. That's just the 50%. And when I said that, they said, wait, 106, like that would be like a 50% pullback on the stock. I don't think it's going to go down that low. Like You need to have some imagination. It's just a few years since NVIDIA back in 2021 did a 68% pullback. Meta back in also 2021 did a 77% pullback. And then as we were talking, he actually brought up Apple as a comparison. And Apple, everyone's darling favorite. Now, this is going back in history, but it's had 80% pullbacks, 81% pullbacks, 76% pullback, 69% pullback, 60% pullback. I have a very vivid imagination when it comes to tech stocks. So, yeah. All right. Nike, not a tech stock. Yikes. I've already got this marked up from a prior live stream. It has come down, and you can see a beautiful hold at back in March of this year. I did not buy it there. I think I saw this in a live stream afterwards. How I did not. Well, actually, let's just leave the annotation. So one of the things I was looking at here was how it needed to come back up and break the upside volume profile level at 77, as it had just held the 52. So this is a beautiful example of volume profiles keeping in price, and now you're in the middle. But what you can look to see is if you can get a breakout above 77, that's good. But then, of course, your floor is going to be at 52. So yeah, great example of, I really wish I bought this thing at 52. But now it's obviously gotten caught on the top side very clearly. It's very clearly trapped in here. And so you basically got, 50-50 where you're going to go because you're here in the middle. But if you get a breakout above this volume profile, then you're good to go. Below 52.35, then the next level is going to be obviously 38.73. So yeah, I would like to have this from 52.32. And then it'll be like UNH where it'll be a position trade. And I'd just be like, okay, it's above my entry. Fine. We'll hold it and I'll look at it. So I'm not bearish on this because it held that bottom side one, but I can't enter it now. Wish I was. If you're in it, you're good for now. VRTS. Virtus Investment Partners. Again, this is one of those where you had a nice big trend from 2020 up to here, and you're just not getting anything. This is, again, that valley of risk thing when it breaks below it. And yeah, you get some teasing, but I don't really have anything to go on here. It can go up or down. So again, no opinion, not a trade for me. All right, let's see. Rope, ROP, Roper Technologies. It's a nice little pullback there. Going all the way back to 08. Jeez. Okay. 315. 315. I should set alert there. From at David S. Okay. All right. We looked at UNH. We talked about Sailor, AMN Healthcare Services. Already got this marked off. Did I not have an alert here? We must have already talked about this coming off this level here. Oh, you know what? Do I not have an alert set? I think I must have looked at this as a breakout for someone that asked before, but I marked off that 1489, and look at that. Look at that. I'm not in this, but I definitely marked off that 1489 in a price past live stream. Huh. Well, now it's already kind of gone off that level. We got earnings coming up, but I think we must have looked at this back in October. That's when I have this breakout, because probably what I was looking at was someone was wanting to get into it yet, and they asked about it when it was doing an Ichimoku breakout. And again, this is why I don't really like breakouts that much, because you have to. I know now. I remember what I did. So when it looked like this, someone came in the chat and they were saying, "Okay, what do you think about this AMN?" And What it had done at the time was it had come down to that volume profile level at 1489. Okay. And it was starting to poke its head out of the cloud here. And what I said was, okay, that's fine. Now we're in an Ichimoku breakout. Now, one of the reasons I don't like breakouts is because you have to give it a very wide stop. You have to give a breakout a lot more risk. You just have to. I mean, you ideally want the trade to break out immediately and go, but this is just from experience. This is why I'm telling you this is the way you have to set it up, is exactly what played out here, where you can have this thing play around for quite a while. You knew where your stop needed to be, which was below that low right there. And now you're basically back at your breakout entry, but you didn't get stopped out because you gave it that much play. And you could do that also because you knew that you're on a big stock that's gone down this much. You can come all the way back up to 56.86 as your target, which is the volume profile to the upside, or 71.95, which is the 50% on there. So you're able to structure a 3-to-1. In this case, I gave it all the way a 4.8-to-1 risk reward to clear that spike and that volume profile. I know that's a lot of words. On breakouts, big stop. But also, you can do a big stop if you have a big reward. And always make sure that your stops clear major volume profile levels, 50%, etc., if you can. And so by structuring this trade for someone that came in live stream in October, it's very validating to see that if they had taken this as I laid it out with the stop, even with this past quarter of going down, they would have still been okay. Now you're in good shape. I kind of like it. I do. And the stop can stay the same right below that level. A little late, but I mean, I guess we're getting at the same place that the live stream viewer came in October. I'm not sure if you're the one, Laurie, that brought this up, but hopefully you're still good in this one. So that's why you need to stop that big, but no bigger. We just had to clear that one thing right there. But yeah, so you could have been good all the way down to 14.14. You didn't get stopped out, didn't need to realize your risk. But that's why that's why I don't do Ichimoku breakouts or breakout trades. I love pullback trades. I like to be right. And if I'm not right, I'm immediately wrong and I'm out. But with a breakout, you got to give it that much play, essentially. Oh, that's you? Okay, good. So we already talked about this. I'm very glad that I've been doing this for a while. And so that's why I already had it on my chart. I try to leave things on and make sure that I save these charts for when we look at these things. But yeah, you're basically back at your entry point. Your stop held. You got a double bottom. There's really only one. I was about to say there's only one way for this to go, but anything can happen. But so far, this thing doesn't want to go down. It's all right. That's when you hold and you let the trade play out now. It's already tested you. It's already tested your patience. All right. Rivian. Man, I need a truck. I just bought, not literally, I just didn't buy the farm, but I literally have bought a little small farm. Here's another example of breakout that I've already done for somebody where looks like so this is another trade that I've already set up from probably back in November or October of last year, a live stream. And this was a breakout, okay? And it came up, but it did not get to our target here, 23.24, which I believe was the 50% of this September to here. Yeah, this is a sad chart. Before this week, I've been saying that I wish that Elon would have just bought Rivian and put their self-driving into it instead of doing a Cybertruck, because the Cybertruck is a trash can on 4 wheels. But I grew up here in the country of Georgia, and a truck is a truck. A truck looks like a truck. A truck is not a trash can. It has a cab. It has a bed. It has like a front end that is, a truck is a truck, okay? And Rivian, they made a truck that looked like a truck. It just doesn't have the Tesla full self-driving. So I've long time wished that Elon would just buy Rivian. I'm just pontificating right now. But I don't think he's going to, because he's doing all kinds of other things. As far as this goes, at least it's not going down. Well, in the long term, but yes, it's not for me. It's not for me. In fact, like I said early on, I alluded to, I sold most of my Tesla this week. This isn't bad, Rivian. It isn't bad. You're still, let's see, hold on. Let me not totally poo-poo it. It's just it's a very messy trend. I mean, you could call this accumulation, but yeah, you're already breaking that 50%. Just not for me. Like, it's just not going. I mean, I'm not saying it's dead, but and you're still within the realm here of the breakout. This is why you give breakouts a lot of play. And it might, and basically in the past, it's kind of played around. So you're just going to be kind of stuck in this for a little bit before you get stopped out. You hit your target. Yeah. So that's Rivian. So it's not for me. Tesla. Really, at the end of the year here, the last 2 weeks of December, you know how we're kind of doing this full circle with the silver. You know, silver did a daily false breakout right here on Thursday. In other words, it punched above on price and then closed back inside the range. And Tesla did the same thing on the weekly, or the daily and the weekly. Actually, it did it on the weekly and the daily here at the end of the year, where you just couldn't get it to go up. You couldn't get that big green dildo bar. And I liked the company. I was like, I'm in it for the long term. And then he discontinued the model that I drive, which is the S, to repurpose that factory to make Android robots. What good does that look? I'm a big dude. I can't fit in a 3. And I don't want a Y either. I loved my S. It's a gentleman's car. It's sleek, it's sexy, it's fast, and more importantly, I can get my gangster lean on easy. I don't have to put the seat all the way in the back. And now I've got to consider, like, what do I keep a car that they're not going to make anymore? Made me mad. I'm going to sit here and tell you guys not to emotionally trade, but it made me mad. And I say F Elon. And the reason I bought Tesla, I bought mine in, I had a trade back in 2020. Okay. I'd hitherto not really cared much about Tesla, but back in 2020, I had played it from a nice little dip right here. I got a whole story about that we're getting a little bit late for. But there was a trade. I think it was on Tuesday. There was some kind of announcement that Elon came out with that afternoon that pumped it. This is back in the 2020 heydays of trading. And I took profit right about here. And then I saw it keep going up. That's when I started always leaving a little bit on for anything, any stock. Then it pulled back in February 2023, the year I got my Tesla, to a 50% level here at 160. Beautiful, beautiful level. Now it came and retested again in April 2024, but picked up that long-term trade. And so I've had this for almost 3 years now. And I can say that my thesis was, wow, what a great car that I bought. Yes. Elon paid for my car as of definitely closing it out. And so now my thesis that they make a good car is over. The trade's over for me. It was a technical setup. That's how I like to get into anything. And again, with UNH or what we were looking at earlier with Nike, sometimes when you're a long-term trade, you got to be willing to let it come back on you. Don't let it threaten your. You can give you a little stress, but I mean, you knew that you didn't want it to make that new low. So long-term trades can come back on you. You got to embrace your inner Warren Buffett of, going to hold this thing and ignore what Mr. Market is offering you in terms of price. But yeah, technically failed breakout. If it was anything else, I would have closed Tesla then at 475. Decided to wait a little bit. I got that final catalyst. Now I know. Here's the reason why I'm not gonna be mad at myself for being emotional about this. Now I'm mad at Elon for doing something. And so every time this stock might go down, it's going to make me pissed off even more and make me trade even worse. So I'm going to remove that emotion. I'm going to take my profits and we'll see what happens. But if I'm going to spread a little bit of FUD, I think Elon's doing a lot. As the Zoomers say, he's being a little extra. And he, as a cult of personality and his stock, as you can see, it has some wild swings. I'm pretty confident I can get back in at a lower price. We'll see. We'll see. Screw him taking away my car. I'm making it where now I got to worry about if I'm going to be able to get parts and stuff for it. I've been treating my S like a truck, moving stuff in it. I just found out that I scratched some of the interior, and now it's going to be there forever because I'm going to keep this car forever. Great car, and you discontinued it. Screw you. All right, not you guys. Elon. Kava, same setup, looking at 60.52. Mr. Hoist. All right. All right. Oh, Melvin, you said back on Pfizer. I liked it. Obviously, I put it on my list here for next week. In the small account challenge, I started saying that I was going to take all the live stream stuff, but I started getting really kind of picky about the trades. Maybe we'll just put that into that along with the AMN. You know what? Maybe we'll just do that. The small account challenge is the social media challenge. How about that? How about that? We'll take y'all's trades and I'll manage it. It's fine. Prove it that we can do good work together. All right. So Kava, that is 60.52. You got that push up, and that's going to be your level there. What's going to be our volume profile in here? It's not really going to match up. Not really have a match. It's a weak, but it's a weak trade. But if you want to try to grab that at 60.52, you can. Cool. That sounds like an orc's name or something. KULR. All Technology Group. Man. Oof. Yeah, this is gross. Nah, you just don't have any. You have no blue chip type uplift. I don't like that. I don't like that chart. Hymns. Probably have looked at this before. This is in the value of risk. You can see this has been where I've done an example where you came back down to your 50%. It should have gone. It should have gone. Now you're down here. This is quintessential value of risk. This is absolutely, when I talk about the value of risk, it's, when I talk about that, I make that red because it's bad. It's because you've come to a support level, you've tried to hold it, and it's failed. Now you're sitting in the position. This is why I closed out of Microsoft. You're sitting in the position, you got in your entry, it failed to go. Now your stop's been triggered, or at least where your stop should have been. And now there's no floor beneath you. If you hold on to it, it's just going to keep going down. If you cut your losses, that's the moment it's going to come back up. Nothing you do is going to be correct when you get into the value of risk. And so that's why I always try to avoid it. And I don't know when I did this markup right here already on HIMS. It was probably a few weeks ago, but this is a weekly chart. And since I annotated all the reasons why this was entering the valley of risk. Every how many weeks it is, it's just continued to go down. And that's what happens when you break a support. And now you just don't know where to go. Now, maybe I want to be a savvy, person, bottom picker, and I want to try to pick it up, but I'm not going to even look at this thing until at least it comes down to 2160. In fact, I want to set an alert there. And so, yeah, let's do that. Boom. Okay. Did that set? Oh, alerts. Yeah, we did. Okay. Usually puts a little thing there. Oh, I don't see it. Anyway. All right. AMN, we got that. Please review HIMS. Got it. You asked me again to review it. I'm going to assume that means that you're in it and it's hurting. I'm sorry, guy. I'm just being honest with you. Like you guys get what I'm saying though, right? The reason I say this is because I've been in these things. Okay. I bought something and I said, I'm going to get out if it goes below here, but I didn't listen to myself. And now you're sitting in this thing that every time you look at it on your account, it's less and less, it's more and more red. I just said, no, I'm not going to let myself get in that situation, because when I look at that negative position, it influences my mood, it influences my trading. It keeps me from finding better opportunities. I'd rather take that money and then go find a better opportunity for it rather than sit and wait for something to come back. Let me just tell you right now, I don't know what's going to happen with HIMS, but you have to tell yourself whenever you're looking at something like this, it's not coming back. It could, but you have to tell yourself in this situation, buddy, it ain't coming back. You're not getting your money back. The money's gone. I mean, we just looked at that with MicroStrategy. Did a 101 with somebody a couple of weeks ago, and they were hoping that MicroStrategy would come back. And what happened instead? They got assigned another contract. You can't, hoping's not a trading strategy. If you're new and you need me to tell you that, I'm glad that you now heard it. But eventually, you're going to take enough losses until you'll know it's the case. So, all right. All right. Procter & Gamble. Love Procter & Gamble. Own it. Oh, didn't that come back to? Yes. Oh, yes. So this came back. Procter & Gamble came back in January. I knew in my head I liked something about it. Bing. Volume profile, KISS. What was that low right there? The volume profile level, actually, let's see, let's go on the daily. This is from here. It's actually a little bit higher, that red line right there. So volume profile level is basically 137.77. The low of Wednesday, January the 7th is 137.62. I already own it. I am remiss that I didn't add to it, but beautiful, beautiful volume profile. This is why I love volume profile, is things like this. I'm gonna leave that on there. So we already asked about this in a live stream before. Beautiful, 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 beautiful. Oh, gorgeous. What's the dividend on Procter & Gamble? It's probably not much. Being a Coca-Cola, Procter & Gamble, these are I'm just gonna own these boring things. 2.82% dividend. I mean, in a money market account, I think I'm getting 3.3. It's not bad. It's not much. It's not bad. I'm dividend reinvesting. So it's compound interest, essentially. I mean, this thing isn't going to give you YOLO gains, but I will say this, though, from that low in 137, we're looking for that thing to come up to the high. I like it. It doesn't give me any stress. Didn't even know. I mean, I knew I had a lot of Procter & Gamble in like a long-term account, but didn't even know it pulled back. You don't even see it on the list here because I don't put the long-term stuff in there. My favorites. I probably should maybe, but then what happens is it ends up filling up the whole thing. But Procter & Gamble is one of the things I've had for many, many years. I mean, it's not going to make you, it's not going to YOLO, it's not going to double in a year. but it'll double in a few years, as it has for, decades. So hoping is not a trading strategy. Hello, how do you feel about Moderna? I want to have a positive opinion about it because it is, again, healthcare. And my overall thesis on healthcare is that the largest holders of wealth in this country, the United States, are the baby boomers. And they're getting older and they're going to want to stay alive and they're going to spend money on healthcare. Now, the question remains, what companies are the boomers going to spend money on? Think of the boomers as being, they're going to be consumers of healthcare, and they got a lot of money. And so I like this weekly pop that we've had for the last several weeks since November. So 38.74 is where we're going to put an alert. I'm going to let this thing pull back to that full 50% there. You're in the pullback now. Good stuff. I bet you if we were to let's do the volume profile for the leg coming down there. It's actually a little bit lower. So the levels I'm going to probably look at are going to be that 50% there, or if I want to get even more, I want to catch it on a dip down to 33.92. That's what I might do. And again, going back to all the things like Fiserv and Dollar General, I like this. And why I like this as opposed to, I believe it was KULR. Number one, I've never heard of KULR. I like stuff that is in the S&P 500 because in case you guys aren't aware of like some of the niche, not really niche, it's the theory of how indexing has fundamentally changed and influences the stock market. In other words, if you have your stock in the S&P 500 or in the NASDAQ, you're getting the benefit of people that voo and chill. Everyone has a 401k, right? Well, if your employer typically does. I was going to say everyone. Most people, I should say most. I got a friend of mine that's trying to get me from generalizing too much. People have 401ks. People have IRAs. And a lot of people, they don't do the kind of stuff that we're doing, which is trying to, find individual stocks. What do? They just throw money into an index ETF. So you have this month by month, quarter by quarter, year by year, constant inflow of money into the components of the S&P 500. Plus, the S&P 500 is 500 stocks. That's plenty for me to run scans on every day and find opportunities. And I'm just checking, so I'm not totally wrong here. Yes, Moderna is in the S&P 500. So, and even though the price action is really bad since 2021, you still got a little bit that I can still tell there's a lot of money in this company. This is a multi-billion-dollar company because the stock moves at least in a kind of a lazy but up and down way, as opposed to you guys can see what I'm talking about, right? I mean, you can make a lot of money in these kind of stocks, obviously, but no, I don't want I don't care if something is at a major multi-decade low, but that at least you see that money is flowing rather than being electricity up and down. Like that's what I'm saying. I mean, I look at that. This is something I might want to pick up, and it's healthcare. So those are the levels I'll be looking at is 38.74 or 33.92. So I set my alert. That's good. All right. I think we're good. I think we have had a good stream, guys. I think hopefully we've helped some people out. You're welcome, Unreal. I'm just here to help, guys. I love talking about this. This is what I do, and I want people to know what I find is valuable and do it. And so, yeah, hoping is not a trading strategy, but 50% levels, volume profiles, and false breakouts, they are. So, have a good weekend, everybody. Thanks for hanging out. I'll be here next Friday. Yes, I will. And trade wisely. Like, share, subscribe. hop on Discord. Bye-bye.